How do you avoid losses in investment?
Well, if you're really investing, you're probably not going to be able to avoid losses at some point. No great investor has been able to avoid losses at some point. Even Warren Buffett has lost money on investments. So you have to be in the game and recognize if you're reasonably good at it, you'll probably make more money than you'll lose money. And what I tried to do is to interview some of the best investors in the United States and talk to them about what their secrets were, how they got where they are, and what they would recommend to other people who want to be investors.
Part of this is the definition of short term. How short is short term for the different chapters of your book?
Well, of course, some investors are trading daily, but for people that do what I have typically done, which is private equity, it's a longer term investment hold, which is typically 3 to 5 years. Clearly, people like Warren Buffett are holding almost forever. But I'd say generally investors who put money to work are trying to get some kind of good rate of return somewhere between a 3 and 5 year period of time, typically in the private equity or venture capital, growth capital areas.
David, were you surprised what any of these luminaries said in terms of their investing secrets or their mantras?
Well, I don't know if I was surprised. I've known many of them over the years, and so I've really spent some time with them before. But generally what they would say is that you have to take some risks. And the great investors are basically going against conventional wisdom. The conventional wisdom will say to sell, and the great investors will say now's the time to buy, or vice versa. And the most common mistake that they all felt people make is that when the markets go up, people tend to get in. When markets go down, they tend to sell. And the great investors tend to do the opposite. When markets are in trouble, as they are now, you could argue, now is probably a pretty good time to invest. You won't see the results of your investment for 2 or 3 years if it's successful, but generally people are now really skilled investors, I think, are buying things now at the bottom of the market or close to the bottom of the market.
How has investing wisdom changed, or investing beliefs, as we've seen a complete change in the technology underpinning a lot of it, with a lot of it done more quickly, democratizing in many ways who can get in, how people can trade?
Well, it used to be investing was really something available only to the top wealthiest people in the country or in the world. Now everybody can participate and invest alongside some very good investors by going into their funds. One of the big changes is that the rate of return was always the most important thing. The highest rate of return you could legally get was what people wanted. Now people do worry about things like ESG. That was not a factor 10 or 20 years ago. Now, while ESG has been under some attack lately, there's no doubt that ESG factors are important for a lot of investors and for institutional investors as well.
David, in the next hour, we will witness a Queen of the United Kingdom with her coffin move through the door of Westminster Hall. It is an ancient, ancient edifice. It is as ancient as what you brought to America, which was a copy of the Magna Carta. Please explain your view as the one that helped the National Archives with our heritage. Please explain the reach from the time of the Magna Carta and Westminster Hall to Queen Elizabeth.
Well, the Magna Carta was designed, and there are versions of it from 1215 to 1297, to give people, and generally the wealthier people at the time, not really the average person, though it later evolved, the benefits of things like trial with juries, no taxation without representation, right to habeas corpus, things like that. Interestingly, the Magna Carta became less significant in England for a while and became more significant in the United States, because when our charters were drafted for the colonies, the 13 colonies, they typically had the rights of the Magna Carta or as put into those charters. So in many ways, our Revolutionary War, which was against England, ironically, was really based on the premise that we had the rights of the Magna Carta. Many people in this country believed that they had those rights because they were guaranteed in the colonial charters. Mm-hmm. And for some period of time, the Magna Carta became much more significant in this country, really, than it did in England.
David, we see a United Kingdom with the changing of Prime Minister, and clearly from their Chancellor of the Exchequer, a growth at any cost strategy. Is there any history where growth at any cost works?
Well, growth at any cost will just produce inflation typically, so I think you have to be careful about any type of growth. I think the English economy or the British economy has some real challenges now, more than even the U.S. economy. I think Brexit has had some impact on Britain that probably is not as favorable as people would like. I think also the economy is not as strong as Britain would like or Europe would like. And I think the European economy is behind the U.S. right now. Inflation is probably as high as in the U.S., but the growth is much less likely to go forward than it is in the U.S. So I think the British economy has some real challenges now.